This is a special podcast presentation from 700WLW.com. This is Casey Boland On Demand.
Casey Boland is with Hanghold Capital Management, as you should know. And, Casey, we're talking about investing here today. And when it comes to what you learn from a crisis, there's a quote out there. The quote is from Jeremy Grantham, and what's he say?
So Jeremy Grantham is a very well-known, respected institutional investor, and he said, regarding the financial crisis back in 07 through 09, in the short term, we'll learn a lot. In the medium term, a little. In the long term, nothing at all. And that would be historical precedent, is they say, we don't want to let a good crisis go to waste. And the reality is we oftentimes forget what happens, and we continue to make the same mistakes over and over.
And a lot of it has to do with timing. Explain that.
Well, the herd mentality seems to always pile in at the wrong time. Recently, I was talking to somebody in their 40s, and he shared his experience with the financial markets. He got into some mutual fund in the late 90s. When that didn't go well, he took out his savings, started flipping houses in the mid to 2000s. As we know, with the housing crisis, that didn't go well. He vowed never to invest again, but now he's back looking at the market, and the market's near new all-time highs.
All right, a happy ending. Be careful who you take financial advice from, obviously.
I understand your sources. It's easy to find investment advice anywhere these days, but 99% of the stuff you read or listen to may not have the interest of yourself or personal circumstances for you in mind. And many people, they take the wrong advice from the wrong source, and they did it in the last cycle, and it didn't work out well. Also, when you think about prices, there really is no such thing as a bad investment. If there's only a bad price, no security sector asset class is bulletproof. Safety is an illusion. Bank stocks felt safe in 2007 because they paid great dividends, yet after they fell quite a bit in 2009, they seemed to be risky, but they'd already fallen 70 to 90%. Any investment can become attractive at the right price or unattractive at the wrong price.
And then pessimism tends to motivate people to, take action in the market more so than optimism.
Yeah, and it's easier to buy into pessimism than into optimism, and fear sells, and we see it all the time. There's always an intellectual theory that sounds legitimate for some bold call, like the dollar collapsing and the dollars just continue to go up and up and up in recent years, hyperinflation or gold going to 5,000 an ounce. Following these types of bold predictions, it really works out well for investors.